welcome. You're watching BTTV. This is Market Today. I'm Tanya Aneja coming live to you from Mumbai. And with me is Shail Bhatnagar, our markets editor from Delhi. Well, volatility is likely to be the central theme playing out on the Lal Street in the week ahead as global sentiment remains weak. But what should be your strategy and where are the markets headed going forward? We'll discuss this and much more. But first up, the top headlines for you. The latest war in the Middle East will cast a pall of gloom on sentiment at the Lal Street as an impending escalation in the crisis will result in global crude oil prices reclaiming their previous highs. A global risk-off equity trade is now in place. Investors need to be extremely cautious in buying potential dips in the market as global headwinds such as high treasury yields, strong inflation, and now a war between Israel and Hamas terrorists threatens sky-high valuations. Good morning, Shail. It's a Monday morning, and of course, markets are likely to remain volatile amid weak global cues. The risk of sentiment inequities of late was triggered by the rising bond yields and firming dollar. And of course, FI is selling overhang. That also remains a challenge for local bulls. Of course, investors will now closely watch the September inflation numbers by the US and India and along with FOMC minutes. But where do you see Nifty at this point in time, and what should be the strategy now for the investors?
Good morning, Tanya, and good morning to all our viewers who are joining us from different parts of the country and across the globe. First things first, our deepest sympathies to the senseless killing that has happened of Israeli citizens, and we hope sanity and peace prevail the soonest. With that thoughts, Tanya, let's start analyzing how markets are likely to behave. In the growing list of things that are against equities at the moment, we've added the Middle East war between Israel and the terrorist organization Hamas. The most immediate impact you see is on crude oil prices, which have bumped up 5% to about $86 a barrel. Let's start by analyzing the Nifty for the moment. Although nothing was on the horizon as far as Fridays was concerned, and the Nifty opened almost at its day's high of somewhere like 19,670 with an uptick of about half a point. So the 3-day rally that you saw from a low of 19,333 to about 19,653 has moved into two specific resistances. One is the 20 EMA, which you see so visibly on the chart. It's a cluster of EMAs that is likely to impart a resistance to the Nifty somewhere like 19,650, 19,700. And now this added worry of the conflict in Middle East, which will again push up crude oil prices. I'll request our PCR to at least fire the crude oil chart. You'll see a nice bump up that's happened after a 6-7 day fall. So this is in the growing list of negatives that the Indian market is grappling at. So as far as the GIFT Nifty is concerned, it's pointing to a downtick. Now if that downtick happens, 2 or 3 things are most likely to take place. This is definitely a sell on intraday rise kind of a market. So after the downtick, if you see an uptick happening, then you sell into it. Tanya, the sentiment is not good for across the board, and much will also depend upon how quarterlies start. We'll start with TCS on October 11th. TCS has also announced a buyback. More on that later. But strengthening crude oil prices, you'll also see the chart of the dollar index as also the 10-year bond yield. These are negative global headwinds which are impacting equities, and sooner or later you'll see this coming to domestic shows. So as far as Nifty is concerned, you will see a gap down, a minor gap down, which the GIFT Nifty is also pointing to. That gap down should take some kind of a support at 19,550, 19,600, and then on you'll see a nice bounce back, which sensible traders will sell into. As far as the options data is concerned, you'll see 19,700 emerging as a major resistance. That's also where the 20 EMA of the Nifty is situated, and the fact that we've seen a 3-day rally. So you have to be extremely cautious on the long side when it comes to Nifty Qs. A dip and then a subsequent bounce is probably a greater trade. So wait for the trade to come to you and only then take in a position. Sell on rise strategy will work better intraday. Positionally, the Nifty now is likely to be on the short side. Tanya, that's as far as the Nifty is concerned.
Okay, absolutely. You have to be extremely cautious, as Shail pointed out, and lots of negative global headwinds as well. But let's talk about Bank Nifty as well, Shail, because that index has displayed a sustained increase in buying interest. And at present, if you see, Nifty Bank seems to be trading within a range of 44,000 to 43,800 or levels, indicating a period of sideways consolidation. So, what, according to you, should be the strategy when it comes to Nifty Bank?
So again, Tanya, the same thing happened on the Bank Nifty. It was a 3-day rally, and from the low of Wednesday, which was 43,850, we closed somewhere like 44,360. So that's 150 plus 360, somewhere like a 500-point bounce that you saw in the past 3 trading sessions. Again, the same headwinds actually impact the Bank Nifty more than the Nifty. So global inflation is a big worry. 10-year treasury yield in the US at about 4.8%, which is a 16-year high, is one of the worst things that can happen. And of course, you see this underperformance of frontline banking counters in the private sector space like ICICI, Access, Kotak and HDFC Bank. So again, the same things apply on the Bank Nifty as well. If you get a bounce, that is most likely to be sold into. And the fact that we've seen continued weakness in the first 4 private sector banks which make up the Bank Nifty, there seems to be some kind of profit booking likely to continue there. And the rally that we've seen into PSU second run banks such as Central Bank, Bank of India, Indian Bank, Indian Overseas Bank, I can name so many, Bank of Maharashtra, J&K Bank. I think the easy money is made, and given the global headwinds that we are facing, most likely you have to be extremely cautious on the cash side as well, Tanya. This is not a market for the weak-hearted. Just sit back, let the pain move out of the system. From what it seems as of now, the conflict between Israel and Hamas will get extended on the timeline, although it's not something which is related to our borders, but the fact remains that it will have global repercussions, and any substantial dip towards 19,200, 1900, 18,800 on the Nifty will then provide an opportunity to buy. But let those levels come and then we'll take a call. At the moment, positionally, Nifty and Bank Nifty are better placed for bears rather than bulls, Tanya.
Absolutely, Shell. I think the global sentiment that remains a challenge for all the investors. But let's talk about, F&O space. Lots happening there as well. So what are you looking at in the F&O space today?
Tanya, it would be, really a bit of an issue to name individual stocks apart from TCS, which is announced its 4th buyback in as many years. But we've already have Devarsh Vakil, Deputy Head of Retail Research at HDFC Securities, joining us. Let's get him into the conversation and take his views on both the broader markets as well as anything that he likes individually. Good morning, Mr. Vakil. Welcome to Market Today on Business Today Television. It's such a pleasure to host you, sir. What would be your view on the broader sentiment in the market? And at this point of time, does anything look attractive to you, which our investors can look at for the longer term, sir?
Right. So, first, the big elephant in the room, the conflict between Israel and Palestine. So that is the first thing which we will have to see. Any further major escalation of between hostility between Israel and Palestine or any other Gulf or Saudi region getting involved may impact the risk appetite globally, and that may lead to weakness in global markets, as you were discussing earlier. So that we have to keep focus on and keep watching that developing geopolitical event. Other than that, there was on Friday, if you see, there was a blowout US jobs report, and that sparked a late day rally into US market, especially Wall Street. And data revealed that the US economy is still strong despite the higher interest rate there, and inflation is moderating there. So that is setting aside the fear of that the higher interest rate has caused the US economy to slow down. The October month, we'll get the numbers for the current GDP numbers of US, and indications are that it could be in the northward of 4%. So that kind of GDP growth is still happening in the US in the short term. So shorter term, the markets are likely to find buyers at the lower level. In India also, we saw a nice pullback from the lower levels. The crude oil had corrected despite today's spike. It has seen some kind of a correction. So shorter term, I'm okay with the market, but if you were to talk about little longer term, 2024, it could be a very challenging year. A lot of political news, especially from the state elections, the US in the end of the year, middle India central election, and China problems. Those things will be in focus 24. So as you just pointed out,
Right,
this
sir.
is a market where we have to be a little cautious and sell on the rallies. Shorter term, I'm okay with the market.
Right, sir. Let's briefly touch upon individual stocks. Anything at this level in the market, or anything individually on the stock side that catches your fancy, which can probably be added to the portfolio from a systematic investment point of view, sir?
Right. So we like banking as a sector. Um, as you were discussing earlier, some of the easy money has been made, but I think that is the sector which will not be affected by the global uncertainty. Many of the export-related stocks will have an impact because of the what will happen into the geopolitical situation. So I'm looking at the inward. I'm looking at the domestic stocks, and that's where we find that there is still money to be made in PSU banks. So we are sticking to the largest PSU bank, the SBI. It is trading around 590. So between 594 and 564, we are asking investors to accumulate this, and our target is 750. See, SBI has a surplus SLR of about 4 trillion rupees. They have a comfortable LDR. And in light of the modest deposit growth in the market, the one with the strong liability franchise will be able to sustain its loan growth. So we are expecting SBI to continue its growth. As the Indian economy, the investment cycle picks up, SBI will be able to increase the lending book. So our SOTP target is 750, where we are valuing the State Bank at 1.3 time adjusted book of March 25. So SBI can be accumulated on the PSU side. On the private sector bank, we like Federal Bank. We think that it is headed as one of the large banks of India. They have a branch light model, and they have a very strong deposit franchise. The retail deposit of their overall deposit is 90%, which is very good, and healthy CASA ratio of about 34%. And that is likely to keep their funding cost very stable. Brick by brick, they are executing their strategy well, and we think that it can be emerge as one of the best in class mid-sized banks in India. That's why we have given a target of 175, which is valuing the book at 1.6 time adjusted book value. So between 146 and 136, gradually one can accumulate Federal Bank on the fall with a target of 175. So these two banks are likely to be on our radar over the next couple of weeks to be accumulated.
Okay, absolutely. Keep an eye on these two banking stocks. And good morning, Mr. Vakil. Tanya this side. Let's talk about IT companies as well. They are in focus ahead of Q2 numbers, and one of them is TCS. TCS is in focus ahead of its Q2 numbers on 11th of October, and of course, its buyback as well. So I want to know it from you that what are your thoughts, when it comes to TCS?
So shorter term, because of this buyback, there could be some pop, and those investors who are want to buy it below 2 lakh rupees, retail investors, if they buy, the usually the buyback acceptance is high and are likely to make some money on this. So if you want to buy for more, I would advise retail investors or viewers to uh, spread their uh, spread their sorry So spread their purchase over the longer term in different accounts, and the longer term picture of IT companies are little difficult. We are going to see a lot of slowdown in the IT companies because of the advent of lower demand from newer technologies. The Indian companies are trying to get into higher value added services like machine learning and AI and all, but that will take about 2 to 3 quarters. So these companies have an excellent management. They have a good balance sheet, and they are throwing up a lot of cash, and that cash is used to buy back. So that supports the downside of these stocks. But I don't see major upside in these stocks apart from the buybacks which has been announced. So we are equal weight on IT. We feel that the money is to be made not in the large cap IT services, but smaller product companies. Some companies like Persistent, Nucleus. That's where the money is to be made. We have a lot of recommendation on that side. I think retail investors will do well to focus on the mid cap and smaller stocks in the IT companies.
Right. Mr. Vakil, you've pointed to the banking sector as being one of your top picks as far as the next couple of 6 months are concerned. I'd like to take your view on how Titan is shaping up. We've had a very, very strong review of the quarterly performance by the company itself, and the stock was in a fairly robust shape on Friday. Would you like to sort of stick your neck out on Titan?
So we have a Titan under our coverage, and our institutional analyst has a reduced rating on these stocks. It is not the comment on the business model or the business which is growing quite robustly, as you pointed out. It is a call on our valuation. We think that the at this valuation, our investors feel, our analysts feel that there is a certain amount of downside in the company. Earlier, we had been quite bullish on it, and we had earlier recommended it. It has gone beyond our target. It is trading around 3,100 or so. We had a reduced rating with a 2,600 target on it. So our analysts feel that because of the valuation, which is quite steep, it is better to wait for investors to buy the companies like Titan, which are trading at a relatively higher valuation than the what current fundamentals demand.
Okay, absolutely. That's the verdict coming in on Titan. And let's talk about, some of the pharma stocks as well, Mr. Vakil. Any pharma stocks that you like and that are on your radar?
So, pharmaceuticals have been going through a tough patch. Many companies have been facing issues on the global export side. The Indian pharmaceutical companies, where they have local business, those are relatively doing quite well. Most of the Indian companies where we had coverage have achieved targets. Um, we had Bion, FDC, Markson, Alchem. These are the companies where we earlier had issued reports, but these companies have achieved our target. So we are going to wait for certain dip in these stocks to buy into pharma companies. If somebody were to look at, if you want to invest as a fund manager, somebody wants to allocate some capital, then we think that there is possibility in some MNC companies on the international side. AstraZeneca could offer some opportunity at the lower levels. Ami Organics is a small company where institutions can look at the lower levels. But these are the stocks where one need to accumulate at the lower levels. Current level prices doesn't offer substantial upside, but if there were to about 10 to 15% dip in these companies, maybe we can look at them.
Fair point. Coming back to the broader market, Mr. Vakil, where do you see value beyond the banking sector? We've discussed pharma, we've had a view on Titan, which is from the FMCG pack. But at this level, is there a sectoral call on the long side?
Yes, so long side, I think the opportunities are the bottom up opportunities. And if you were to generalize sectors like engineering, capital goods, power, that's where we are going to see some opportunities. Unfortunately, most of these stocks have already seen a run up. So I'm not very gung ho on them at these prices. But as you pointed out, you were discussing earlier, because of the geopolitical uncertainty, because of the situation in the US bond markets, we may see dip in the markets. And at that time, it is advisable to look at power generation companies, smaller engineering companies. These are the companies are likely to they already have a huge order book. They have an order book for a couple of years. Their execution is likely to pan out, and that will come into earnings. That will make these stocks little cheaper on the valuation side, and that's where we will again look at them. So engineering, capital goods are the sector where we are bullish for a longer term. Earlier last time when I was on your show, I have recommended stocks like KNR Construction, where the road construction and the infrastructure story is likely to play out. So if somebody were to accumulate, I would say road construction contractors, materials for the infrastructure like cement companies, that's where one can look at. Cement is also one more sector where on an absolute basis, long positions can be built up. They had a uh, inflation on the raw material side. I think that has been now taken care of. Companies will be able to announce the volume growth and the quarterly earnings, which will come this time in the October, November month. I think cement companies will do quite well. So, absolute basis on a sector base, smaller engineering companies and cement companies, road construction contractors can be looked at.
Okay, absolutely. And now we also have with us Mr. Akshay Bhagwat. He's the Senior VP of Derivatives Research at JM Financial Services. Good morning, Akshay. Always good to have you on our show. We were discussing about, this all weakness because of the weak global cues and weakness across the board and the war between Israel and Hamas. So I want to know it from you that how are you positioned, when it comes to Nifty, and what are now the important levels that we should watch out for?
It's the unprecedented geopolitical tension which has caught up in the weekend, and we just saw barely a 250 odd point recovery from the 19350 odd level in the Nifty last week. And probably my sense is that this geopolitical pressure of war is going to play hard. At least the immediate reaction, if you were to see on the indices in the Nifty Sensex, they are going to be on the weaker side. So we can expect a retest of the recent prior swing lows on the charts, which was roughly around 19,350 odd levels. Even 19,200 can be tested if the view is for the week. Now 19,700 forms to be an important resistance. If you look at the derivative parameters, barely it's in a range. So the options clearly suggest that 19,500 is your support base, and 19,700 and 800 is where the call writers are positioned. So as of now, there is nothing, no major directional bets which were built, but the geopolitical pressure may may play hard, because last time, if you recollect, when the Russia invaded the Ukraine, that was somewhere way back in February 2023. What happened was we had 2022. I'm sorry, we had a fall of over 7 to 8% in a matter of 8 trading sessions. So that was the immediate impact of war, which the markets did absorb. But after that, you did see a strong recovery of around 14% in a matter of around 18 trading sessions. So yes, the immediate impact is going to be hard, but you need the markets to settle down. Barely where it will settle is a question mark, because as of now, 19,200 is the most crucial support zone. These are the low points of the last 3 months. So this will have special relevance how it
Right,
plays.
sir.
Yeah.
Right. Good morning, Akshay. We'll just pay a little bit of attention to pre-open rates, and in front of you is Nifty, down 82 points at 19,571. The weakness that is creeping in because of the Middle East conflict is now visible in prices, at least. Let's look at how the index heavyweights are performing. Since it's negative open, let's first look at the stocks which are pulling down the index. Okay, Infosys, about 1% lower, 1464. How about Reliance? At 2310, it's 1/3% lower. HDFC Bank is flat at the moment. We see ICICI Bank down 1% at 936. Axis is down 0.6%, 995. We have Kotak Bank down 0.5%, 1735. I want to see what TCS is doing. It's a buyback and it's a gap up of 1.6% at 3680. Given the broader environment, it would be sensible not to chase this gap up at this level, which is a 52-week high for the stock. Valuations look pretty okay, in fact, on the higher side. So this is something to be kept in mind at 3680 with the buyback at your background. More details will be available on October 11th when the company discusses its quarterly performance. Apart from the index heavyweights which are in the green, which are in the red, which are the ones in the green? Sadly, none. Bajaj Finserv, which was the top gainer on the Nifty on Friday, is down about 1%, 1620. Bajaj Finance 0.5% lower at 8130, consolidating near record highs. Enough of index heavyweights. Let's shift focus immediately to F&O stocks beyond the heavyweight circle. MCX 3.5% higher, 2108. Remember, it's the launch of crude futures on a parallel exchange, which is impacting the stock price. ONGC and Oil India is what we will see because of a jump in crude oil prices. 1.1% higher on ONGC, at the moment 183.50. Sugar stocks, Balrampur Chini 433, 0.7%. Festival demand, as also a UK FTA which the government of India and the government of Great Britain will sign is likely to impact positively on liquor companies, and therefore sugar companies are likely to do pretty well. Let's look at anything else apart from these stocks which are moving. We'll shift focus to NSE 500. Remember, the Nifty is now down 120 points at 19,532. So 19,500 would be the new battle zone for the bulls and the bears to stake it out. Prestige Industries, an uptick of 4% at 695. A major brokerage has come out with a research report. BEML 1.7% higher, 2389. Midcap IT, as Mr. Vakil was pointing out, is doing pretty well. eClerx 2.4% higher, 2210. These are the prices. We let them settle at this moment. So it's a downtick as far as the Nifty is concerned. So a gap down of about 100 points as of now in pre-open trade. Let's see how the Nifty moves. So the first trade on the long side would probably be buy on dip, and let's see when sell on rise happens. We'll stick to Akshay. Akshay, any 2 or 3 top picks that you have in mind given the open that we are seeing as far as pre-open trades are concerned?
Well, if it's about the opening tricks, I feel mostly the market would be on the weaker side. There is going to be significant profit booking during the day. That's what my sense is, going by the global cues and the way the pre-opening suggests. If we are trying to position ourselves on the buy side of trade, then one can look at Bajaj Finance, because clearly on the technical charts you had a very strong breakout on the prior trading session. So probably the opening is going to give you prices of 7950 or 8000 range. So strictly as an intraday pick, you can consider buying Bajaj Finance once you get in that range. And on the sell side, you can look at Adani Ports, JSW Steel. A lot of metal names also would come up, which are more vulnerable to profit booking. So profit booking is the sense I have, which will dominate the market proceedings today. And my sense is it's going to be a strongly negative day for the markets in day trading session.
Fair point. Let's get Mr. Vakil into the conversation. Sir, where else, apart from the defense space, apart from the capital goods and cement space, do you see value? Let's discuss a bit on the mid caps and the small caps. We've seen a very, very sharp rally on the indices themselves. The small cap up about 33%. The mid cap up about 26-27% from the month of April onwards, when the RBI paused its credit policy interest rate hikes. What are you telling clients? What should be the strategy for mid caps and small caps?
Our advice is to better to be safe than sorry. We have seen a huge run up in mid cap and small caps. In an environment where US treasuries are rising, the cost of capital is rising there. There could be some accidents on the macroeconomic front in globally, and that could lead to a much larger risk off. We have seen geopolitical tensions also because of what has happened over the weekend. So these are the areas where money flow into mid cap and small cap can get restricted. So you have to be very selective. You have to look at the valuation. Many of these stocks are trading near their higher range of the valuation. So that's where we are a little cautious on them. It is from now till November 24, where US elections are over. We are of the opinion that it is better to stick to larger mid caps and larger cap stocks. Yeah.
Right. For the benefit of viewers who've just joined in, both Mr. Vakil and Akshay, let me rephrase the questions that the rest of the market and, of course, the broader universe is dealing with, which is this latest conflict that has sparked over the weekend between Israel and the terrorist organization Hamas. To you first, Mr. Vakil, how do you see the rise in global oil prices impacting Indian equities, and any dip which might happen on the Nifty? How would you look at it in terms of whether it's a buy on dip or a continuous sell? Sir.
So, as my colleague pointed out, we feel 19,200 could be defended. It is a short-term support, and we are little gung-ho on the market on the shorter term. We think that October could be a good month for the market. So we feel this dip should be a buy and decline opportunity, provided we have to see these escalation. Any further major escalation with hostilities between Israel and Palestine could impact risk appetite globally, and that could lead to a more weakness in global market. That would be a thing to watch out for. Otherwise, we think that this is a opportunity to accumulate banking stocks, cement stock, as we just discussed.
Right. Global crude oil prices are already up 4%, at least in Indian markets, at a comparative of $86 per barrel. When you look at this kind of a structure, remember in the last 24 months, this is the second war that global equities are grappling with, and to that we have headwinds such as the 10-year US bond yield at a 16-year high, the dollar index strengthening to a 10-month high. How do you see longer term structures in the Indian market? Do you think there are chances where bears are moving into the system and this probably might have been a very decent record high that we've seen for a long time, which we saw in September.
So, for the next 3 to 6 months, I think there is a possibility, based on the earnings which we are going to get, based on the GDP numbers we are going to get, we may see it to further highs, but that would be an opportunity to lighten up, as I feel 2024 is going to be a very crucial month. As you just pointed out, US is sitting on a $33 trillion of deficit. If there is a spike in the US Treasury from here, the interest outgo on that will create a major recession into US in 24. So that we have to be worried about. Earlier we discussed the elections in Taiwan that could flare up some tension between China and Taiwan in the beginning of 24. In the middle of 24, we have India's central election. 4 states, I think, in fact, today is the date where the election commission is going to announce the polling dates for 5 states: Rajasthan, Chhattisgarh, Madhya Pradesh, Telangana, and Mizoram. So these are the events which can impact the risk appetite at the higher level if the ruling party were to fare a little badly in these elections. And then in the end of 24, we will have US elections. And the conflict which we are witnessing now, what will be the impact of
Right,
that
sir.
China election? These things needs to be worried. So right now I'm okay. Till 24 and 23 and we can be okay, but 24 we have to be cautious.
Right. Akshay, to you and on your shoulders rests the view technically. How do you see the Nifty and the Bank Nifty against the backdrop of this conflict? Where would buying emerge on a sustained level on the Nifty? And how do you see the broader overall structure of the market given this war that we are seeing in the Middle East?
Shailji, the war which has erupted over the weekend has come as a surprise to the market. So there was no environment being priorly built that something was cooking up, and so this is a total surprise to the market. And my sense is whenever a surprise hits you hard, the markets are going to get into some kind of immediate panic mode, as I see it. So the recent lows which I see of 19,300 and 250, they are going to be tested maybe today or tomorrow itself, and the impact is going to be hard for this particular week. For the next 3-4 days, there will be a lot of volatility. I would be specifically looking at how the India VIX, which is the volatility index, plays out here. If the VIX shoots up, that's a major indication that something is not right with the market, and we need to have our plans as to how we need to go about in the next 3 to 4 days. Because if 19,200 is challenged, that is the mighty important support which the market is looking at, and if that gets breached, then we can anticipate further fall in the market. So as of now, I'm anticipating 350, 1 to 2 days. That's the possible downside which I look at. It will take time, at least 4 or 5 days, for the market to settle down. Volatility will be the key. I would advise for long-term traders just to hold it out, wait in patience, because this week is really going to be one of a sorts. Yes, markets will rebound hard, but the next 4 or 5 days would be challenging for the markets. 19,200 on the Nifty, that's the key support, and on the banking index, it's roughly around 43,500, which I see would be the possible zones which may be tested and which will be the vital points to deal with in the coming week.
Right, Akshay, and on that cue, we'll look at how markets have opened, ladies and gentlemen. It's a 131 point gap down on the Nifty, 19,515, and it's escalating on the downside. As far as the cash market is concerned, 144 down, 19,508 is what I see. It's a 400 point downtick on the Bank Nifty. 43,950 in front of me, and Nifty 500 is down 1% at about 17,131. Let's look at the first stock in action. TCS, a buyback announced. Details will be available on October 11th when earnings are in place. India's largest IT company, 0.5% higher, 36.38 in front of you. Let's shift to heavyweights. Reliance Industries, 0.7% lower, 23.01. HDFC at 15.21 is down 0.8%. Infosys flat at 14.76. It's benefiting from the green rub-off that you see on TCS. How about other stocks? There is pain all around. SBI down 1.9 at 583. Let's look at the Bajaj twins. Bajaj Finance 8101 down 0.8%. Bajaj Finserv, which was the top gainer on the Nifty on Friday, down 1% at 1616. Okay, what else is weak? Kotak, Axis, and ICICI are down a third to half a percent. The Nifty at 19,512 is now down 141 points. Remember, it's opened below the second support. So a gap down of 141 and now somewhere near a very, very strong option support of 19,500. We look at the 19,500 call on the Nifty in a moment, and let's now focus on what's happening in the FNO space beyond the index heavyweights. Crude oil is up. ONGC is the top gainer, 1.6% higher, 184.45. UBL, a direct beneficiary of the FTA agreement between which is being in the works between UK and India. 1575 liquor stock is up 1%. Balrampur Chini 1.3% higher, 435. Let's look at the most active counters. TCS taking it away 1% higher, 3650. M&M 1% lower, 1531. MCX 1.6% higher, 2075. There are no gainers that are worthwhile except for now Infosys moving up in sympathy with TCS. So it's TCS and Infosys which are helping the index up, and also the IT index, which is now up 74 points at 32,407. Let's look at all-time highs. There are none. 52-week highs, only TCS. Let's look at the broader markets in NSE 500. Top gainers. It's only mid-cap software stocks. KNS 2613, 3.5% higher. Solar Industries has got an order from Coal India that's at 5,210, 1.3% higher. So it's a fairly okay kind of an opening, except for the gap down that we've seen. Will it consolidate at these levels? Let's touch base with Akshay. Akshay, your view on the opening as far as Nifty is concerned, and what would you be doing? Is 144 points enough for today?
Well, Shailji, as you rightly said, 19,500 is the support based options data. So there will be some bit of temporary stopover. That's what my feeling is. 19,470 to 19,500 is a temporary day trading support zone. You might have some bit of a minor bump up in intraday trades. But if I were to take a trade, it's a clear sell for me today. I will keep a stop loss of 19,580 on the trade, and I would target the recent swing low of around 19,250 to 19,300. Even in day trading, probably 500 might hold on for the time being, but in the second half of the day, there is a good chance this might crack down and we might see lower levels going ahead for the day.
Fair point. The 19,500 call ending October 12th is now at 103, 104, 101 rupees. It had closed somewhere like 194 rupees. Remember, this is the call that you need to watch in case the markets now start rallying after this gap down, especially on the Nifty. It's a very, very strong support at 19. October 12th on the Nifty. What else is moving on the green side? Let's look at prices now. It's a fairly weak start. The Nifty is now slipped below 19,500. We'll see how that moves in. But at the moment, it doesn't seem to be looking good as far as bulls are concerned. Weakness all around. Let's show some stocks which are at least in the green. Solar Industries 5,230, very high ticket size. The company's won an 1,800 crore order to supply explosives to Coal India. So that's in the green. Prestige Estates 684, 2.5% higher. TCS are doing pretty well, 3642, half a percent higher. Tanya, what are you looking at?
Actually, Shell, all eyes are now on IT stocks, and as you rightly pointed out, look at stocks like HCL Tech. Of course, TCS is in the green, but apart from that, Infi is also. So, I want to come to you, Akshay, for this because we have TCS on 11th of October, but we also have HCL Tech and Infi. On 12th of October. So, what are your thoughts when it comes to these IT stocks, HCL Tech, Infosys, and TCS?
Have been positioned in the morning trades and the way the IT, especially if you look at TCS and Infosys, there is some bit of support which is slowly coming up in the IT stocks. Probably it is because of the results which are due in a couple of days, and also the buyback news is pretty strong enough in TCS, which is keeping the downside cap for the day. So I believe that TCS might be the outperformer if you were to look at the entire space of stocks today. The way they are performing, 3620, 3630 possibly is a day trading support. Although you cannot expect major gains in the IT counter, but the feeling is, looking at the way they have opened and the initial couple of minutes of trade, the sense is they are going to hold on. So TCS, HCL Tech, Infosys, they are going to hold on for the day, but unfortunately, I doubt Nifty is going to behave in the same manner. So probably buy IT and sell Nifty might be the pair trade you can consider if you are a day trader.
Okay, so we've had the first 5 minutes of trade, and the next 5 minute candle on the Nifty is again on the weaker side. We have 19482 in front of you, and as our friend Akshay pointed out, it's a weakness that is spreading across the board as far as the Nifty is concerned. Let's do some interesting things for you. Let's look at the top losers when it comes to the Nifty, apart from the index heavyweights. Just a moment, please. This will take a minute in front of me. Okay, so the top losers are Adani Ports, 3% lower, 805. BPCL, remember, a rise in crude oil prices is perceived negatively for oil marketing companies. At 337, it's down to 0.8%. Adani Enterprises, 2.5% lower at 2419. SBI, of course, the index heavyweight, 1.8% lower at 583, and Tata Steel, 2% lower, 123. NTPC, 1.76% lower, 231. These are the top losers on the Nifty. Let's look at the top gainers. Well, it's tech all the way. HCL Tech, 1.1% higher, 1252. TCS, flat at 3635, and Infosys, 0.4% higher, 1484. So the stocks that are helping the Nifty are only two within index heavyweights, which is TCS and Infosys. The entire banking sector has gone for a very, very sharp downtick. Akshay, your view on Bank Nifty, 500 points lower, 43,850, and we are still at 925.
Clearly, Bank Nifty has broken the 44,000 support in the opening trades. If you look at the banking stocks, majority of them have done exceptionally well in the last 1 or 2 months. And some small triggers in the market can be especially very damaging in the short term, because profit booking is the first thing which comes on your mind when the index has moved significantly in the last couple of months. So profit booking is what we are seeing. 44,000 has been broken. Some bit of panic in day trading is setting in, and possibly 43,500 to 600 is the zone where Bank Nifty is heading for. Even if you look at the volatility index, it is up almost 11 to 12%. We are at 11 and a half on VIX, and clearly that's a sign that the fear is catching on in the market. Puts are being bought into. As I look at the option chain, 43,500 puts have been bought in the opening trades in today's Bank Nifty, and possibly it's a weekday, and 43,500 is where you should be looking at as far as the day trading goes in Bank Nifty.
Okay, absolutely. And Akshay, we have lots of losers, but look at Prestige Estates. This stock is actually in the green, and we should pull up this stock for you. It's up around 3% as we speak. And the Q2 sales that were really impressive. They were up 102% to 7,092 odd crore rupees. Odd crore. So I want to understand from you that what do the technical charts now suggest for this particular counter? I mean, will the momentum continue going forward as well?
Yeah, definitely. The chart structure is very strong, and I believe with the news which supports the opening trades in prestige estates, probably 700 is a type of a trading resistance. If one were to look at strictly from a day trading bet, I would suggest that the broader technical structure is strong, but from here to momentum to pick further in prestige estates, it's mighty important that 700 should be taken off. If it does, then we can obviously see 740, 750, but 700 would be mighty tough to take out as far as day trading or tomorrow's session goes. So if you are holding prestige estates, my suggestion would be book it out. If you want to take a fresh trade, wait for 700 to cross 740, then would be your targets. The stop loss as of now is 660 on all your long bets in prestige estates.
This is a record high on the counter, Tanya, very well put at 686. And we've seen the stock rally for the last 5 trading sessions. So, a very sensible advice coming in from Akshay that this is probably a time to take some money away from the table. Coming back to the Nifty, we've seen 19480 being tested. Remember, this is the fourth support on the intraday technical chart, and that is something that has held at least in the first 5, 7, 10 minutes of the trade. The candle of the first 15 minutes of trade would be the most relevant, and the low of that candle will be tracked very, very closely for an intraday position. Remember, the low so far is 19480 thereabouts, and that is also the fourth support level on an intraday basis. At the moment, the battle is thick and fast at 19500 when it comes to bulls and bears. Remember, this is a very, very important support on the option chain, and let's see how it takes place. I want to revisit the option price of 19500 call. It's about 92.97. Keep an eye on this. We'll discuss this in 1 hour from now. Okay, it's 9:28. Let's look at stocks apart from the index heavyweights and shift focus to 19500. I want to see what's moving sharply. There is a company called Gujarat Pipavav Port, 1% higher, 128.20. I'm purposely looking at high beta, low ticket size items. Both public sector oil companies, ONGC and Oil India, are up sharply. 1.5% higher on Oil India, 300. ONGC 182, up 0.3%. That is how the markets are. And because they are down, it's the defensive sectors which are coming up. Pharma and FMCG in particular. Divi's Lab at the day's high 37.55, Ipca Labs day's high 9.50, and of course Hindustan Unilever at 2500 is now in the green. Tanya, what are you looking at?
I think Shell, as you rightly pointed out, that investors, they really need to be extremely cautious when you are, when you are buying on dips. And look at PSU Bank Index. That is down around 2% now, and all these stocks like Bank of Baroda, SBI, Canara Bank, Indian Bank, they're all down to the tune of 1 to 3%, in fact. So, Akshay, any stocks that you like from PSU banking space? I mean, any stocks that one can buy on dips, especially at this point in time?
Well, my suggestion would be, you can look at Bank of Baroda. Now, Bank of Baroda is considerably trading flat as of now. And broadly, my sense is that, we are in a consolidation as of now, just around 2 rupees down as it stands. Let's wait for some strength to pick up in the market before we commit our long bets, at least for day trading in PSU banks. If we do not see the strength, then I would suggest let's wait it out for a couple of days, because the support, if you were to look at Bank of Baroda, it's somewhere around 208, 206. In Canara Bank, that works out somewhere around 360, 365. Life, and Union Bank. These are the three banks which I have on my watch list. But considering the way the markets are behaving, the early trades, I would not immediately jump onto PSU banks and take a contra trade, because clearly the momentum is down and it would not take time for these stocks to slip back again. So let's wait and out. If it breaks the day's high, yes, we can go for a buy. If not, then let's wait it out for a couple of days. Supports are where we can again anticipate some bit of bounce back. As I said, Union Bank, Canara Bank, and Bank of Baroda. These will be the three PSU banks which you can have on your watch list on the support zone.
And Tanya, what's really interesting is the call option that we had suggested, 19,500, in the vicinity of 22 to 23, 92 to 93 rupees. It's doing fantastically well now. The price that you've seen is now somewhere like 103, 104. It's a 10 rupee uptick, so it's a 10% gain for those who are interested in options. And remember, I told you the fourth support on the Nifty, which was at 19,480. That seems to be have held. At the moment, we see a bounce back of about 27 plus 20, 47 points from the day's low. The Nifty now at 19,530. So that's how options work. You've seen a 10 rupee, 10% kind of a jump in the last 5-7 minutes, and this still looks good. Let's see if the second support is taken out. The trade that we had discussed was after the downtick around a specific support. If the Nifty bounces back around a very crucial level, which was 19,500, that was there for the taking. We'll keep continuous track of this. At the moment, 105, 106 in front of me. That's how options work. Actually 108.65. So that's how it is, ladies and gentlemen. Let's look at other trades which are working pretty well in the markets. Coromandel International, 1182. Small block deals happening. I remember distinctly this counter was at a record high last week. Let me just check the chart in front of you. A fertilizer maker, 1181, and one of the finest balance sheets that you will see in corporate India. Let's go to Akshay and take a view as far as these stocks are concerned on a portfolio level. Record high, Akshay, what would you do?
For Coromandel International, the charts are very strong, and as you said, the balance sheets are pretty strong. So, if it was in my portfolio, I would recommend to continue to hold this, because the chart structure is strong. There is no reason to worry. As I see, it is overbought, but the momentum is still on despite the conditions of the market we are in. So, possibly the stock is heading for 1225, 1250, as I see in the next 7 to 10 trading sessions. For 1150, 1160 is the support base where the stock is setting up its base. So clearly a hold or a buy on dip stock, and 1225 to 1250 is where you target for the short to medium term scenario.
Okay, absolutely. And let's discuss HDFC AMC as well, Akshay. That company is gonna release its numbers on 13th of October. So, what should be the strategy ahead of the numbers?
HDFC AMC, if I were to look at the chart structure, it's in a range. Now, 2600 is the lower end of the range, and 2750 is the upper end of the range. Now, you had a small recovery in the last trading session because, in anticipation of the reaction was a positive one pre-result. Now, if you want to take the trade for the results, I would say play by the levels. Let 2750 get crossed. If it does, then you can set yourself for a breakout in the stock, which can target 2825. So my first conditional buy in the stock would be if 2750 breaks on the spot chart for HDFC Asset Management Company. The product chart structure is strong. So even if you have a sell-off in this post result, then I would suggest that 2500, 2530 is the downside, which you can again retarget to buy in the stock. So two buying levels, 2500 to 2530. That's your first buying zone in case of a dip. If not, 2750, buy on strength, buy on a breakout is what I would suggest for HDFC AMC.
Tanya, it's the entire defensive pack in the pharma sector which has come to the aid of the Nifty. Let me just read out some prices for you. Divi's Lab 3766. It moved from a low of 3690 to 3766. So 10 plus 66. It's a 76 point bounce from the day's low. Dr. Reddy's 5460. The low was 5400. Nice 60 point bounce back. Sun Pharma, a low of 1109, now at 1128, still marginally in the red. And in the broader FNO space, when it comes to pharma, a very, very nice move that is coming in on Ipca Labs, 947, 1.5% higher from a low of 927. Cipla, Sun Pharma. Let's stick with Akshay. Akshay, anything that catches your fancy as far as pharma stocks are concerned on an intraday basis? The highest beta there, Oro Pharma, 917, 1.3% higher. Strong upticks in open interest as well.
Yeah, definitely. If the opening trades and clearly the flow on the day trading is on the defensive bet, and pharma names clearly stand out in the first half an hour of trade. So Sun Pharma, Cipla, Oro Pharma. If I were to pick out a single name in this, as of now, I think Oro Pharma is the best placed on the charts. 914 is where it trades. Possibly the recent swing high would be a temporary day trading resistance. That's around 928 to 930. But I believe 950 to 960 is where the stock is heading for. So recommend a buy on pharma space. Oro Pharma will be my top pick here. Keep a stop below 880, target around 940 to 950. So Oro Pharma is one stock you can consider. Even in the healthcare space, you can consider Apollo Hospitals here, which is at the base of 5043. Trading in a sideways consolidation, making a recovery attempt from the support base. This can easily target 5300 with a time frame of a week. So 5000 is the support, stop loss 4950, target 5300. That would be my second pick from the healthcare space, that is Apollo Hospitals.
Shell Adani stocks are also trading lower, 3 to 4% downtick there. Look at Adani Power, Adani Ports, and then we have Adani Transmission, Total Gas. All these stocks are trading 3 to 4% lower. Any stocks that you like from the entire Adani pack, Akshay, to buy on dips at this point in time?
I would, looking at the chart structure, and I think out of this entire space, I would say let's avoid this as of time being, because most of them are either consolidating in a range or have given a break of the lower end of the range. So Adani pack for day trading, at least for timing it, would not be on my watch list. Adani Wilmar here, is at the support base. If you recollect, 4 days back, it had a spectacular day trading rally right from 335 to 360. So there can be some bit of a buying or green shoots if you were to trade it, time it for trading. Then Adani Wilmar is one name which pops up, considering the setup it has on the technical charts. So 330 will be your stop loss. It is at the key support base, so chances of a recovery here are more. So out of the entire Adani group, Adani Wilmar will be on my watch list on the buy side.
Okay, Tanya, we'll pay a little more attention to the Nifty now. We've had the first 15-minute candle in front of us. The low of that is 19,480. Exactly the fourth support level on an intraday basis. From then on, the Nifty has strengthened intraday. So 480 and now 540. So 20 plus 40. It's a 60-point bounce from the day's low. Keep in mind that the gap down was somewhere like 140 points. So of that 140, 60 has been recovered by bulls. This is a buy on dip rally at the works, and as of now the second resistance is at 19,553, which is also the day's high. If that is taken out, then the Nifty 500 call will become better and better. As of now, the price on Nifty 500 call is somewhere like 110 rupees. Remember, we saw it at 92. So that's how options work. You have to wait for the market to be on one side and then catch hold of the ITM call at that point of time. And this looks to be getting better and better. At 19,543, the Nifty is now moving into the second support level, which is at 19,553. If that breaks, then 19,500 call will do even better. At the moment, 113. Of course, you need to keep on watching this fairly rapidly. What else is helping the index? Okay, let me show you something very, very interesting as far as index heavyweights are concerned, and we'll shift immediately to the FNO index heavyweights within the Nifty, and I'll tell you a very interesting thing. Let's look at HDFC Bank, a low of 1517, now at 1523. Reliance, a low of 2297, now at 2311. TCS in the green, Infosys in the green. So these are stocks that are moving from intraday lows and helping the index. ITC, you've seen a low of 437, now at 441. What else is helping the index apart from TCS and Infosys? Okay, it's Kotak Bank, a low of 1724, now at 1730. So that's how, ladies and gentlemen, we look at stocks. At the moment, it's a battle between the bulls and bears at 19,550. If this is taken out, the 19,500 call will now be in the money, and you'll see a lot of interesting things happening. It just hit a high of 126. So that's how options and tradings work, ladies and gentlemen. From the way things are at the moment, it looks fairly okay for the bull side. TCS days high 3660, and strong block deals happening on this counter. Aisha Motors days high 3480. L&T Technology Services days high 4720. Tech Mahindra HCL Tech days high 1231, 1250 respectively, and of course the entire pharma pack now helping the index. As far as that option trade is concerned, now it's off. Tanya.
Absolutely, Shail. And you just mentioned HDFC Bank, and we have the numbers on 15th of October. So, Akshay, what should be the strategy when it comes to HDFC Bank?
Well, HDFC Bank, if you see, has been in the limelight recently, has been battered down till 1500, but a strong recovery at 1500 is what matters here, because that's a strong support base the stock has defined in the recent trading history. So I believe 1500 is where again it will see some bit of a recovery. We are at 1520 right now, so 1510, 1550 is the area where you re-enter the stock on the long side. 1480 will be a stop loss. I'm expecting a recovery back again till 1560. So it's a buy on dip. 1510, 1515 is where you enter the stock on the buy side, and target 1560 with a stop loss of 1480. 1500 is a lot of put writing bets in the option space, which also further verify or validate the support base, which is now building up at the 1500 level.
Okay, ladies and gentlemen, we have the first half an hour of trade as far as the broader markets are concerned, and a very good time to take a stock of what has happened so far. On the Nifty, we have 19,550 for you, still down 102 points, but that's not the story. The story is that from the low of 19,480, the Nifty has recovered somewhere like 70 points so far. So the buy on dip at the moment seems to be working fairly well around a specific support. 19,500 has helped the bulls so far, and that has gone in the favor of the long side. Nifty Bank still in pain, 43,911 in front of you, 450 points lower. Remember, the intraday low was about a cut of 500 points, still in pain there. The IT index doing fantastically well, mainly on account of a very strong move coming on TCS because of an announcement of a buyback from their end, the details of which will be available on October 11th. At the moment, 250 points higher, 32,590. Apart from TCS and Infosys, which are index heavyweights, the mid-cap IT sector is moving fairly rapidly. Tech Mahindra, HCL Tech, L&T Technology Services, Persistent, Coforge, all of them in the green. So that's how the markets are shaping up at the moment. Nice block deals happening on Infosys and TCS in front of me. So those are the two ones that are providing support to the Nifty. And the Nifty has broken the second support, the second resistance level as of now at 19,560. Let's look at the call that we had pointed out for you at 92 rupees. That at the moment, ladies and gentlemen, is trading at 125 rupees for you. So a move from 92 to 125 in less than 25 minutes. Tanya, what else are you seeing?
I think, Shail, as you rightly pointed out, some of the defensive counters. Look at some of the FMCG stocks, HUL in the green. And we have some of the names from the pharma sectors as well, Sun Pharma in the green. So, Akshay, any stocks that you like from FMCG and pharma space, especially at these levels?
Yeah. From the FMCG space, it is Hindustan Unilever, which I would like. Very strong technical support base, and even I have recommended this stock in on the prior shows on this channel. So I believe it from a medium term charts are shaping up very strongly, and 2540, 2550 is where it should be heading for. So leaving aside small minor jerks here and there, this is a very sturdy technical setup, and 2500 is a strong presence of put writing in the derivative segment. So I would target 2540 for the October series. Keep a stop loss of 2460 on this trade. Accumulate, buy at current rate. Even you can add further at 2490 in case you get a dip, and 2550 is where you can target for the October month. So HUL would be one of my top picks in the FMCG space. Some bit of pullback is possible in ITC, where 235 and 240 time and again has been very appealing for the bulls. So a small pullback of 1.5-2% is always possible in ITC. And in the pharma space, as we named, Aurobindo Pharma, Cipla, and Sun Pharma would be my top picks, and as a defensive bet in the current market situation.
Okay, it's 9:48, ladies and gentlemen, and time to shift focus to the corporate part of our program on Corporate Radar. We have Mr. H.P. Singh joining in from Satin Credit Care Network, where he's the chairman and managing director. Good morning, Mr. Singh. It's such a pleasure to welcome you on Market Today on Business Today Television. It's NBFC which does micro lending to all sorts of small and medium-sized and micro-sized businesses. Mr. Singh, it's a pleasure to host you, sir. How do you see the overall business environment for Satin Credit at the moment? We've seen a very benign interest rate scenario for the previous 6 months since April. And how do you see that moving?
So we are predominantly, we do microfinance, and that is also there in the rural space. What is happening in the microfinance sector, technically the robust demand which is now propped up because of technically normal season, normal rainfall, which is there, and the normal monsoon which has been there. There has not been too much dip in terms of the rainfall, and the demand in the rural sector for working capital, as well as for small businesses, as well as for agri, is probably very robust. So what we feel, I think, for the next coming quarters, there is going to be a lot of demand in terms of lending, which is going to be there. For Satin, we've given a guidance of a 25% growth. We are on target to deliver that as per the first quarter, and going forward, at least in the next few quarters also. Overall, I think, the collection efficiencies are holding up, the income levels are holding up, and it is all positives technically looking at the rural space for microfinance and microlending.
Mr. Singh, you have a diverse set of borrowers, and typically they are from the lower income level. What is the average loan size that Satin Credit Care offers at the moment, and how have you seen it move over the last 4 or 5 years since you got listed?
So our average ticket size is about 43,000. We have graduated from technically about 30,000 about or 25,000 about 4 to 5 years back. This is all because of the demand again in terms of the ticket size which is there. Our minimum is about 35,000, but our maximum holds up to about 75 to 80,000 rupees. But the average ticket size is about 43,000, which is there, you know.
Okay, absolutely. And good morning, Mr. Singh. Tanya this side. If you could also talk to us about your new portfolio in Assam. I mean, what kind of growth rates are you looking at when it comes to your Assam portfolio, and in terms of disbursements?
So disbursements again, you know, after a lull of about 1.5 years, you know, Assam disbursement picked up about a year back. In fact, you know, what we are looking at the Assam market now, post the MIRFS, you know, deal with MOU signed with the state government. In fact, our first tranche for this for the MIFRS, we've been received in the category 3 borrowers. We've got close to about 10 to 15 crore, about 14.76 crores, which is we received from the Assam government. Post that, I think we are looking at disbursements which are holding up in a very, very positive frame. If we look at our current state of affairs in Assam, the disbursement are, we disbursed close to about 200 odd crores, you know, in the last 1 year or so. And portfolio quality in terms of collection efficiencies, as well as the demand which is now coming up from the Assam is very, very robust and very positive.
Okay, absolutely. Good to hear that. And, if you could also talk to us about the second quarter. I mean, you said you will be able to achieve that 25% growth target that you had. So, what has been the collection ratio, and where is this growth coming in from, if you could tell us that?
So I won't be able to say specific figures being a listed entity, but you know the guidance which we had given for both the growth as well as for ROA, both are holding good. In fact, as I said, the 25% plus guidance, we are on course to deliver that because of the factors which I mentioned previously. And what we are trying to now really look at is that the way this sector is panning out to be in terms of the growth, and for us, either we're looking at collection efficiencies also being in a stable environment across over there. So if we talk about the portfolio quality as well as, the disbursements, I think, we're on track to deliver both the guidance which we had given earlier for ourselves.
Mr. Singh, let's move on the other side of the balance sheet, which is your borrowing side. We've seen a strategic pause from the Reserve Bank of India as far as the past 5 months are concerned from April, and that sparked a wonderful rally on the entire NBFC space when it comes to stock prices. Given the tenacity of global inflation and the way 10-year bond yields have moved in the US, how do you see the credit picture in India from the lending side, from the borrowing side as far as you are concerned?
So I think, whatever rate hikes in terms of inflation as well as the overall credit environment, I think, that has held on for the last few months as such, and that's the reason why there's not been any rate increases as such. But whatever has happened in terms of rate increase, I think that's been factored in for us in the last 6 months or so. Our last increase, and if you look at the average borrowing cost for ourselves, there was an increase of about 1.5%, but that's previous to about 6 months or 7 months, before from now on, basically, which was there. So we don't further see any more rate hikes coming in terms of, again, looking at the mix of the way the borrowing conduit has been there. We have sufficient liquidity in terms of our balance sheet, as well as, we have a lot of undrawn sanctions, which is probably are there, for us to look at, for ourselves to look at the growth, which I mentioned earlier. So overall, I think, the base rates and the lending rates have now stabilized to an extent. I don't see any further increase in all those, moving forward ahead.
Right. Mr. Singh, would you also draw us a picture for the overall credit environment as far as the Indian economy is concerned? Of course, you deal at the lower income strata, but that income strata works extremely well when people above it in the mid cap and in the large cap businesses are borrowing extremely well from PSUs. When you look at the overall picture of the Indian economy, how do you see the credit cycle moving?
So, since we deal with the rural economy to a very large extent, our borrowers come from the rural landscape, and the rural landscape is all basically fundamentally based upon agri and agri-allied activities, So what I said technically, if the rainfall and the monsoons are normal and the kharif sowing, crops have possibly have had a very slight increase in terms of the sowing also, so that augurs very well in terms of the income generating capacity which will be there for these borrowers in the rural economy. And overall, if you really look at the landscape which is there for the rural economy in terms of having demand for their businesses as such across in that space, that's also very, very robust, So overall, fundamentally, if you look at ourselves, microfinance is based upon the rural dynamics. 78% of our portfolio is rural. So I think, for us, all these positives which are there in terms of income generation and the capacity to borrow, I think, both augurs very well in terms of how the credit demand really pertains for this segment, technically for the few quarters ahead.
Okay, absolutely. Thank you so much, Mr. Singh, on that wonderful note, for taking the time out and being with us here on Business Today Television, and all the very best for the coming quarters as well.
Thank you so much. Thank you.
So let's get back to the markets, and we have recovered significantly, Shail, if you see, and of course because of some of the IT names, FMCG, and of course some of the pharma names as well. The low on Sensex was 65,434, and now we are at 65,739. So smart recovery there, Shail.
Absolutely, Tanya. And should you be a person interested in options, we caught the right one at 19,500 call for October 12th, somewhere like 92, 93, 95 rupees. It's gone up all the way to 136. It's really interesting now to watch the 19,500 put on the other side, which has corrected very, very sharply from 104 rupees to about 58 rupees. This is something to be watched at 58. I think the buy on dip rally that we saw from 19,480 on the Nifty has now sort of exhausted itself. Let's see how it pans out. So keep an eye out on 19,500 put for Nifty on October 12th. Which is now at 57, 58 rupees. Apart from that, Tanya, the first 45 minutes of the markets have been pretty interesting. Be that as it may, war itself is something which is very, very, how should I say, problematic. But wars have to be fought if they are thrust upon us. And that's what Israel is doing. The impact that could have happened at least for the day has happened. We've had a 140-point dip on the Nifty. Unless the war worsens and we have another sharp uptick on crude oil prices, I think the Indian markets have very resiliently absorbed the problem that we've seen. And in a while, we'll get a fantastic gentleman who analyzes crude oil far better than what I can even dream to be. That's Devin Choksi. He's the managing director of DR Choksi Stocks and Shares. He'll be joining us in a while to discuss how crude oil prices have moved. what is the genesis, and where exactly it is headed, and how would that impact our markets. Till then, we'll keep on talking about how stocks have moved. At the moment, it's the pharma rally which is taking away all the gains. It's Granules India now at 64.20, up 0.5%. Weekly high, monthly high on the stock. It's a part of a pharma defensive segment which is helping the market. You've seen intraday highs in Divi's Labs, in Sun Pharma, Aurobindo Pharma, Dr. Reddy's, and it's now the second rung of stocks in the pharma space which are now helping the index and the broader sentiment on its way up, as also the IT stocks. TCS 36.69, perhaps the star of the day because of its announcement of a buyback that will be discussed in detail on October 11th, the day the company announces its quarterly earnings. Tanya, what are you watching?
Absolutely, Shell. So some of the stocks which we discussed, look at Titan. It is down to the tune of 1.6% after the update that we have discussed. And of course, then there is on the flip side, Oil India. That is up to the tune of 2.6% as we speak. So all these stocks will be in focus, ahead of the numbers and the business updates and everything. But Reliance Industries is also in focus, Shell, and for the benefit of our viewers, we have the news also for Reliance Industries. And so basically, the Abu Dhabi Investment Authority subsidiary that will invest around 4,966 odd crore rupees in Reliance Retail Ventures, which is the subsidiary of Reliance Industries. So this stock will be in focus, and it's trading in the red today, 0.5% of a downtick there as we speak. And we also discussed Titan Company. So for the benefit of our viewers, I would like to share the business update that the company has shared. So the company has recorded a revenue growth of 20% for the quarter, for the September quarter, with the jewelry division growing 19%, watches and wearables 32%, and the eye care segment, around 12%. So that's the news for Titan. And clearly, Street is not liking the update, 1.5% uptick there when it comes to Titan. Shell.
Fair point. And that's how markets are discounting numbers that are coming in from top-end companies when they discuss their quarterly performance in some minor detail. Of course, the granularity of that data will be available when both Titan and TCS, as well as Bajaj Finance, the companies that have recently come up with their quarterly performance, discuss those numbers. But for the moment, Tanya, let me just show you something more exciting on so many software that are there in front of me. Okay, TCS, it's contributing 9 points to Nifty's momentum from 480s low that you saw. Infosys contributing 6 points. HCL Tech is contributing 4 points in the green. Dr. Reddy's 1.7 points, and Hindustan Unilever 1.4 points. What are the stocks that are pulling the index lower? HDFC Bank. The red tick because of HDFC Bank is 21 points. Reliance 9 negative points. ICICI Bank 8 negative points. SBI 6 negative points. Despite this, you've seen the Nifty move from a low of 19,480 to an intraday high of somewhere like 19,580, a 100-point rally. So that's how technicals are decided upon from specific support levels. Until about 2-3 minutes ago, I had told you to watch out 19,500 put at 58 rupees. That, ladies and gentlemen, is now 63 because the Nifty is now sell on rise. So that's how intraday options work, and that's how markets shape up during the day. If the index heavyweights are down, it's slightly unlikely that you'll see a green tick overall, and that's how markets are structured at the moment. 415 points lower. Bank Nifty 43,950. The Nifty index at 19,560, down 92. It's recovered from a low of 480 to 575.80, and from there you see some selling pressure coming in. Remember, the second support for the Nifty is at 19,553. If that breaks, again you will test probably 480. That's how intraday things work. I'm just wondering if Devan Bhai has joined us or not. Tanya.
Absolutely, Shell. I'm also waiting for the same. And of course, we have discussed a lot of stocks, and TCS will continue to remain in focus ahead of its buyback and numbers. But for the benefit of our viewers, there are a lot of companies that will be reporting their numbers: HCL Tech, Infi, and HDFC AMC. That these companies will report numbers on 12th of October, and then we have HDFC Life Insurance Company on 13th of October. We have Avenue Supermart on 14th, and then we have HDFC Bank on 15th of October. And talking about HDFC Bank only, Shell, this particular stock has been underperforming, and how? So, when it comes to this stock, what are your thoughts?
Well, Tanya, in complete honesty, uh, I have been an eternal buyer on HDFC Bank for the last
Okay.
20, 25 years. So my view is definitely biased. But I feel that any dips towards the long-term moving averages of 50 to 100 DMA, which is the monthly long-term average of 50 to 100 DMA, is a point zone where this stock should be added piecemeal to your portfolio. Of course, please also take another view from an independent financial advisor. But for a bank which will, over a period of time, Tanya, report 1 lakh crore rupees of profit each year, that is not something to be taken lightly. It controls 10% of India's banking sector, and it's one of those marquee blue chips which should be foundational in your portfolio. Devin Bhai is with us. Devin Choksi, Managing Director at DR Choksi Stocks and Shares, joins us, a fine gentleman with a fantastic control and view on the markets. Devin Bhai, we've been reading your view on crude oil prices. Firstly, good morning. Welcome to Market Today on Business Today Television. How do you see crude oil prices moving over the next 1 month or so, given the conflict that is there in the Middle East, and how will they impact our markets, sir?
Yeah, Shail, good morning, and thank you for having me on your show. Well, whatever little I understand about this particular subject, I find that on one side you have got the terrorist group, I think, who has taken over the control and attacked the country, Israel. Uh, and I guess I think the support has come from Iran because I think those extremists are supported by Iran. Now, on this area, I think one is basically looking at very carefully what the equations are setting. Iran, on one side, has systematically been increasing their oil output, and they're trying to get maximum amount of advantage. Even though Iranian crude remains at a discounted price, they would probably, I think, try and make more money out of increased output. And they're trying to take the advantage out of this situation. So I think the resultant crude oil prices, if it increases, I think that should benefit Iran significantly. Now, on the other side, I think America is mindful about not allowing the crude oil prices to go up, largely because indirectly it also benefits Russia. And at the same time, I think if the crude oil prices goes up in this kind of a manner, then the Western economies, which are already laying under significant amount of pressure and I think had been challenging the inflationary pressures, they would have, I think, relatively higher amount of complications into their economy. So I think my understanding says that even if a knee-jerk reaction has to come and the crude oil prices has to shoot up because of whatever the tension which has arisen, in my viewpoint, I think the prices are not going to go up beyond the level, including the Saudi Arabia and others who have not participated into this particular attack which has happened. So, to a greater extent, I think the crude oil prices are going to remain subdued, in my viewpoint. At the worst, I think even if it goes up by 10%, it will come down in hurry thereafter. That is what my take would be. And this is what I understand about the geopolitical situation and the behavior of the crude oil prices in the market. I guess I think the market is validating today with the price outcome. Brent this morning was up by 3.5% only, as against I think the fear that it will cross 10%. So to a greater extent, I think this particular thesis is getting validated in the marketplace.
Yes, Devin bhai, it's often said that markets react adversely when a negative news in the form of war comes in and then recover. Surely it's early days now, but seeing the intraday move on the Nifty, a substantial gap down and then covering as well as buying happening on the index seems to suggest that we have for the moment tide over the crisis that is there in the Middle East. Given your softish view on crude oil prices from now on, would that be a view that you also held on, which you also hold on broader markets?
I think this is a fantastic opportunity, particularly for India markets. I think whatever the nervousness which is happening in global market due to global market, I guess I think this is going to probably create a lot of buying opportunity for investors who have been waiting on the shores with money. Fundamentals of Indian economy are not getting affected. Economic momentum is not getting affected. Investment coming into India is not getting affected. The amount of money which will be spent before the election next year, I think is going to be huge, and that is where probably economy is going to boom from here on. All these equations are frankly known to a lot many investors across the globe. And this kind of a war attack could definitely pose a good amount of opportunity for those who want to buy and have liquidity in the portfolio. Again, I think another point which I want to add here, uh, Ukraine and Russia, this situation is probably cooling down to a greater extent. It is not escalating. The Cold War may continue to a greater extent, but I think they are not likely to fight bigger one. Given that situation, Ukraine would probably demand for higher amount of development in their economy, and that is the amount I think of around 1 trillion USD easily getting spent over there. How it will get funded and who will fund it, I think will be a question mark to a certain extent to begin with. But the fact remains that I think this kind of money will get spent. And similar situation is likely to happen. Again, I think none of us are expert on the geopolitical and particularly the war related situation. But my take is that I think this extremist attack which has happened on Israel probably I think is likely to be a short-lived, and I think a befitting response is coming in from their side. That is what we are reading. I believe that I think given that situation, the amount of money spent for development would be high. And that is where our market is connected with. Because if global economy is stabilizing due to the spending happening in different pockets, to a greater extent, I think I would consider that India would be at an advantage. And that is where I am betting on this particular odds today and believe that this fall in the market should be an opportunity to buy into. Selectively, though, I think into good quality stocks.
Okay, absolutely, Mr. Toxi, got that. And very good morning, Tanya this side.
Good one.
Where are you spotting opportunities in this kind of a market? Because let's say if Nifty goes to 19,200 odd levels, let's talk about the bear case scenario. So, where are the opportunities and any stocks, any sectors that you're bullish on at these levels, especially?
Frankly, Tanya, good morning to you. Frankly, I believe that I think nothing has changed overnight for India as far as India is concerned on the opportunity front. Uh, to me, I think if at all I have to add one more sector, which probably am always very careful about adding it, is a commodity space and which is metal commodity. I believe that this is one area which is likely to show up and show up big time going forward. And as I see it, the commodity is entering into a probably 8 to 10 years of bull cycle. So I'm extremely bullish about the possibilities of the consumption coming in the ferrous and non-ferrous metals. And that is where probably I think one could add, apart from the infrastructure related spending which is happening in the country. I believe that most of the capital goods companies and the industries which are connected with infrastructure, including service industries, including the banking and finance industry, they all will have relatively better times going forward. So it's more of a structural thought process at this point of time. And individual companies on respective merits are definitely being identified from the investment point of view. The likes of HDFC Bank, which is suggesting that it would probably become double in size from here on to around 50 lakh crore AUM in next 4 years' time. I would think that I think such kind of opportunities are big time opportunities for investors to double their capital in 3 to 4 years' time. Similarly, some of the larger banks, corporate banks, which are having balance sheets and they are growing at around 20% rate of growth, I think that they should be relatively better off in producing better returns. As such, I think they have BFSI space is having around 40% weight on the Nifty, and I believe that any positives in this particular stocks would mean that Nifty would also travel along with, and along with the Nifty traveling to the higher levels would mean that a weightage increase in the other different stocks. So overall, market is appearing well set for growth. Overall, I think we will have relative opportunities in the fall like this. And systematically, one will have to remain invested in companies which are having bigger size. Because I firmly believe that when the economy is growing to 10 to 12 trillion dollars in 2030-35 period, I believe that I think the big is going to get bigger, and that is where the mantra should be. One should be investing in some of the larger companies to make the best out of this opportunity in next 10, 12 years time.
Devin bhai, we are fortunate to have you on a day when TCS has announced its fourth or the fifth buyback in as many years. The stock, of course, at a fresh 52-week high and has rallied for the last 4 days. How do you see this buyback, and what would you advise retail investors to do?
So frankly speaking, I think it's a reward mechanism for the investor. So certainly investors who are desirous of getting the cash in the balance sheet or in the portfolio, they would probably, I think, try and give in this buyback and maybe buy it back at a later date at a lower levels. As far as the company is concerned, I think it's a financial engineering and basically giving away the cash, which is generating lower ROC, and as a result of which I think the valuations get affected. So by way of I think buying the equity out, they're paying the cash back to the investors as the shareholders in the company, and in the process they are strengthening the balance sheet side, the earning ratio side as much as possible. Good part is that this business is generating significantly large amount of cash in the balance sheet and is likely to generate systematically higher amount of cash between 15 to 20% rate of growth on a CAGR basis in next 5 years or so. So given that situation, some of the long-term investors would find merits in buying this stock at every fall, every correction, and with a 15-20% kind of an upside from the fall is something which I think this stock has always been rewarding to the investors. So this is where I see the opportunity for investors. That if you are buying this particular company during the fall, you are likely to get 15-20% kind of appreciation when the market rallies.
Right. Devin bhai, for really long-term shareholders of TCS, which has made significant amount of money. In fact, it's one of the best wealth creators since it got listed in August of 2004. Would you advise that they tender their shares for the buyback, or if you remain a shareholder in TCS for the real longer term, the lesser the number of shareholders, the more money they enjoy in terms of both capital appreciation as also dividend payout?
I think that one should remain invested because this buyback, for that matter, I think is nothing as far as I think a yield is concerned for the investors. Hardly any yield that you can talk it out. I think given the kind of buyback size, it is more of a price stabilization mechanism as I see it in the marketplace. So those investors who are investing for long term, they certainly hold a larger amount of prospects for buying this stock and staying invested for a period of time. As I explained, I believe that I think the on a CAGR basis, the return is more important than to repeat the return on investment on a quarterly basis or a monthly basis from this kind of a company. So one could possibly consider putting the money into the portfolio over 5-10 years time. That could possibly generate relatively better return in your investment portfolio, particularly for large investors who are always looking at opportunity to invest big money into the portfolio stocks. For them, I think this kind of company remains absolutely favorite. In any corrective price, downtrend price, you can possibly buy this stock into portfolio and make the best out of the opportunity.
Right. Thank you, Devin bhai, for your wonderful views both on how global crude oil markets are likely to perform and this wonderful snippet on TCS. I'd just like to add a couple of words on TCS. Remember, this is a hugely profitable cash generating machine from the Tata Group. It is also India's largest software services exporter. And over the previous 4 buybacks, when such companies don't see good utilization of cash, they extinguish equity from the market by buying it back from shareholders who tender such shares. Over a period of time, when equity reduces and the company keeps on making higher and higher profit, it leads to a higher earnings per share, a higher PE, and therefore a higher stock price. That has seen happening consistently in companies such as Infosys and TCS, where they deploy excess cash to buy back their shares and improve shareholder value for long-term holders. So that's it, ladies and gentlemen. We'll wrap it up today. That's all that we have from our side, Tanya and me and our team in the PCR. So far, the Nifty is down 68 points, 19,585. Remember, this is not the story. The story is that it's bounced back very sharply from 19,480 levels to what it is now, a 100-point bounce back that is coming in the first 1 hour of trade. The Bank Nifty down 300 points, 44,062. It was down 500 points initially. So a nice bounce back happening on this fine Monday morning. The Nifty IT index up 239 points at 32,557. The TCS buyback adding a green luster to this index, and that has also pulled up all smaller stocks including Infosys, Persistent, Birla Soft, Tech Mahindra, HCL Tech, so on and so forth. Tanya, the last word belongs to you.
Absolutely, Shail. And I think we have seen a significant recovery, and Nifty holding well above that 19,500 mark. So let's see how the action, pans out going forward. So with that, it's a wrap from me and of course my team and of course Shail. Thank you so much again for sharing excellent data with us and being with us here on Business Today Television. So with that, it's a wrap, but you stay tuned for all the latest market updates. So many thanks for watching.
"72 hours before the G20 Leaders Summit began. In fact, even 48 hours before the leaders descended in the capital. So much so that even 24 hours before everyone was in the leaders' room at the Bharat Mandapam, it seemed that consensus would elude Delhi and that there would be no joint declaration. The opposition had their swords unsheathed. Critics were willing, waiting, and itching